It's the 15th day of January 2021. Thank you for joining us on Frontier Opening Bell here on Frontier Africa Reports. With us today to analyze market figures and key developments across Africa is the executive editor and chief executive and CEO of Frontier Africa Market Reports, Bosun Omofaye. Thank you so much for joining us. We also have Luke Ofejabe, the team lead equity research with Vetiva Capital Management, here with us on the program. Thanks a great deal for joining us this morning. Quickly, let's look at the market position for yesterday. The Nigerian equities market was positive 1.54%. Ivory Coast, the BRVM market for Francophone region, was negative by a further 1.14%. That was for Thursday. And of course, the Egyptian market positive by 57 basis points. Kenya, the NSE, the Nairobi Stock Exchange, 2.41%. South Africa, which is for JSE, positive by 65 basis points. Now, moving further to the stories that typically will always shape the position of investors in the market. We start from Kenya, where the diaspora remittances was up by 10% to $2.8 billion in 2020, but for the period covering the first 11 months of that fiscal year, Sasini PLC takeout for 48%, which represents a 4.14 billion Kenyan shillings for the year end September, despite the COVID-19 virus. That's what they recorded. Ugandan shilling weakens as citizens voted yesterday in that East African country. Of course, we know that declined by some 0.3% or thereabouts. We understand that the margin between buy and sell, the bidders position now has widened in recent times, even though we know that if offshore investors continue to make demands in that space. Huawei is looking to expand into Ethiopia telecom sector, and the Bob Global Bank, which is in Ethiopia as well, recorded a profit growth of 39% to 292 million birr for the 2019-2020 fiscal year or financial calendar, even though the EPS also broadened compared to what we saw in the previous year. Bosun, before we touch on the Kenyan markets, let's look at what is happening in Uganda, given the election and the fact that we still have offshore investors being able to invest in securities in that space.
Thank you, Tempo. I think the whole Uganda election will have to wait until the votes are counted and get to have a lot more clarity by weekend, or at least by Monday next week. The stock market was closed yesterday because it was a public holiday for the election. So we'll get a whole lot more clarity from the equity side. But the currencies that we highlighted for the shillings from the report from AZA was quite in order. But quickly to the rest of the East African space, Kenya remittances up by 10%. Kenya has one of the strongest remittances window on the continent, $2.8 billion US. A few days ago, I think we reported on Morocco. We've reported on remittances from Egypt over the last couple of weeks as well. We haven't seen the data for Nigeria, as it were. We don't have any data officially or otherwise, so we'll wait for that. And to look into Sasini, I think this is just part of the earnings that are coming through from last year. We'll start getting the 9 months in some cases that are delayed. Some will be full year, fourth quarter. We'll also see those earnings. In the US today, the two of the banks are reporting the US earnings season starts today with two of the biggest banks. It's going to continue all the way till Monday. So we're now in the earnings season. Huawei is interested in Ethiopia Tel. We got a news this morning that Ethiotel is also applied to the government, which is the national telecom carrier in Ethiopia, to start doing mobile money business and all of that. Vodacom is also interested. Safaricom from Kenya is also interested. So everyone is interested in Ethiopia because, again, this is a huge population of 100 million plus people, and it's one of the biggest markets north of Kenya across the Horn of Africa's corridor. So I think to that extent, everyone can keep a permanent eye on both Kenya and Ethiopia.
Okay, so let's move on to West Africa and, of course, Nigerian market specifically, and I'll get the perspectives of Luke in this area. So we know that Nigeria, yesterday, the data was released for public debt, which is now at 32.22 trillion naira. So at September 2020, we haven't gotten the details or the data for October, November, or not December. But then DMO, the Debt Management Office there, is to float some 450 billion naira federal government bonds in the first quarter of this year. That represents the calendar, the bond calendar for the Q1 2021. And of course, Lagos 2021 deficit via local debt capital markets. External sources are giving details about that, and that there's a bit of deficit. We do hope that the state government will be able to address all of those concerns. Now, in Benin, Benin Republic, which is in West Africa as well, we know that they have carried out the first bond flotation in Africa for this year. They've raised some 1 billion euros in two papers of, I think, 11-year and, of course, 31-year tranches. So there you have CI Pensions Manager, CNPS, pumping some 10 billion CFA into Atinkou Power. Now, Luke, let's get your thoughts on the Nigerian stories. Looking at the debt status, is that a sustainable status for Nigeria as a country or not?
So at the moment is worrisome, but really, from economic theory, it shouldn't be, because Nigeria is a developing economy. So it's expected that the country will continue to raise debt for some time, to finance its budget, to finance infrastructure development, because clearly there is a wide gap between the infrastructure we have here and what we have in advanced countries. Let me not even talk about advanced countries. Let me mention emerging countries like China. I mean, you can see the wide gap between what you have here and what's there in China. So it shouldn't be worrisome. But like I've always mentioned here, the major issue is that of accountability, not being able to utilize these debt facilities in the most efficient manner. Then looking at 2021, look at the budget for the year. I mean, it's 13 trillion. Projection for revenue is about 8 trillion. So that gives us a budget deficit of 5 trillion. Now the DMO has released the calendar for Q1. It's going to raise 450 billion. So if that run rate will be maintained for the rest of the year, that means the DMO will be able to raise 1.8 trillion from the local debt market. So the remaining 3.2 trillion, where is the government going to get it if it wants to finance its budget completely? Is it going to go to the Eurobond market? We don't think so, because no sane foreign investor right now will want to subscribe to any Eurobond that the government will be interested in issuing due to foreign exchange risk. We still have a number of these foreign investors that are stranded in the Nigerian market. They are still yet to leave because of restricted access to FX. So why do you want to bring your money into this country when you are aware of this? So the best bet for the Nigerian government is to reach out to institutions like the IMF and the World Bank to finance their budget for the year. But for these institutions, of course, to raise debt from them is cheaper, but it comes with strict conditions, like adopting a more liberal market, having just one foreign exchange rate, so deregulating the downstream, deregulating the power sector. Does the government have the willpower to do this? I mean, look at just from the recent hike in power tariffs. We've seen now some stakeholders reacted to that. So can we actually adopt that liberal market in the power space? And currently, look at what inflation figures are saying. I mean, you still want to adopt a more liberal market. Where will inflation get to? About 15%, 16%, 17%. That becomes worrisome. Consumer spending is shrinking. So right now, the government actually needs to start utilizing these resources efficiently. Because if care is not taken, we might see a country heading to a destination similar to that of Zimbabwe, because that's what it looks like. Foreign exchange rate is not looking great, and the long-term outlook for it is not great, given the fact that the long-term output for oil is not great as well. I mean, you can see what market forces are even saying. ExxonMobil, as early as 2013, was the most valuable company in the world. And just last year, it dropped out of S&P 500. Then look at the movement in Tesla's shares, and look at the movement in other in the shares of other EV companies. So that tells you that even market forces have spoken, and they've spoken in favor of renewables. So the government needs to start spending its money efficiently. If you want to diversify the economy, good. You do it in a more efficient manner. You want to grow output in the agri space. You are giving farmer loans to virtually all the farmers we have in Nigeria. That shouldn't be. You can pick like 10 mechanized farmers who are ready to give us up to 15% growth in the agri space. And that will in a way help to boost employment in that region. And before you know it, we can start talking about the industrialization of agri sector in Nigeria. We start processing some of these commodities we produce like cocoa and the likes, and that will help to that can lead to sustainable economic growth. So these are things that the government actually needs to look into for us to get to a point where we will not be that bothered about the debt level in the country.
I agree with you totally, Luke, on funding agriculture, mechanized agriculture, actually, because as we are right now, we've seen the Brexit in the UK, and the UK government is beginning to sign up different agreements with all the Commonwealth countries across Africa. And one of the key areas of interest is food. Food is a major area. Bosin, do you agree with Luke on the debt issue? Should the concern be around rising debt profile, or it should be around the debt servicing cost, or the debt to GDP ratio?
I think it's about debt sustainability and debt productivity. Simple. It's not about any ratio to anything. It's about, one, like to say, is the debt sustainable? Two, if it's sustainable, sustainability means it's productive. It's just like talking about the environment. If your debt is not sustainable, that means you are not productive. You're not productive enough on a long-term basis to pay your debt and service it and be productive and be better. So on what basis are you taking loans or debt or adding more debt if you are not using those debts in a sustainable manner to grow yourself? I think that is just the simple explanation of it. It doesn't need long explanations. If you're taking on debt, it's either you're buying new clothes, you're buying new houses or real estate, you're investing it, that moves you significantly from point A to point B to point C to point D and can leapfrog you. I think that is what debt is all about. United States takes on debt. Every other country in the world takes on debt. India has debt. Canada has debt. The whole point with debt is, look, you just use it to move from one point A to point C or point F. If that has not happened in Nigeria in our history, and that's the only point, we go back to Obasanjo's administration when we cleared the Paris Club, whatever, the debt clearance that we got then has not moved us significantly from point A to point B. Within a few years after that debt cancellation, in which we were able to write about $8 billion or $13 billion, we are still where we are today. So I agree completely with Luke. But very quickly, in terms of the other part of the stories that are coming through, I think it is very good when you look at Lagos State as well. Lagos State is going to use different sources to finance about 190 billion deficit in its 2021 budget, 100 billion from the local debt capital markets, about 40 billion from internal sources, and I think the balance of that, about 80 or so, will come from international marketplace. Thank you.
Okay, let's move on now to before we move to South Africa. Bosin, let me quickly hear your thoughts about Benin Republic that floated the 1 billion euro paper, and of course that's the first African country to do that this year.
I think it's very good news. It shows that those who have what it takes are those who can undress in public. Right now, it shows that Benin Republic is sitting behind us. We all think we are the big brother, but it shows that there's a very strong. Mind you, Ivory Coast did about $2 billion last year in Eurobond as well. These are two French-speaking West African countries. The English-speaking country in West Africa has been able to do Eurobond. Between Nigeria, Ghana, and I think one Sierra Leone or so, we've not been able to do the Eurobond. It shows that somehow something is happening within the UEMOA country in which Togo is looking favorable. Benin Republic just went to the market. Cote d'Ivoire also went to the market. And don't be surprised you see another country within the Francophone West Africa do that anytime, sometime within this quarter or next quarter. So it shows that some things are going on. The fiscal space in these countries are expanding, are getting better. What will Benin Republic use 1 billion euros for? They're going to invest in more in their seaports, in infrastructure that will make the whole position them for the new AFCFTA. They will put it into their SMEs and whatever. Nigeria is the market to attack and take over, mind you. So they're positioning all around us. So I hope we all understand what is going on. 1 billion euros in Benin Republic. The size is not as much as Lagos, but they have strategic vision of what to use 1 billion euros for. And they are positioning strategically for Nigerian market. I just want to put that on note.
Especially now that the borders have been reopened, actually. Luke, you mentioned earlier that you don't see Nigeria, heading back to the Eurobond market. On the basis of what Benin has done and how Nigeria will intend to manage its trade frontier at this point in time, what do you think will happen?
So really, I think this African Continental Free Trade Agreement will actually force Nigerian leaders to think. I mean, it will really force them to think, because it will get to a point where it's going to impact all businesses negatively. And that's because a number of businesses in Nigeria are so inefficient. So by the time you start facing competition from countries around you, they will be knocked out. So this agri space, the issue of fertilizers being too expensive, by the time we start having inflows from neighboring countries, these farmers will be knocked out of the market. So that's just what it is. So the Nigerian government actually needs to be actively involved in developing a number of these sectors. The oil and gas is gone. Within the next 10, 15 years, that sector is gone. That's the reality for now. So what are we doing in other sectors to ensure that there is efficiency in that space? Because the reality is that you can't run an isolated economy. That's what the world is pointing to. You can see globalization happening at a very rapid rate. So you have to follow along. So if you're going to follow along, where are your strengths to compete? That's the thing you want to look at. Okay, Nigeria is one of the biggest producers of cocoa. Okay, what else? Do we produce chocolate? What's stopping us from producing chocolate? So we're also one of the largest producers of sesame seeds. But do we process it here in Nigeria? No. So these are things that the Nigerian government actually needs to address in order to compete favorably among its African peers. Yes. Because if not, a number of businesses here in Nigeria will be knocked out. I mean, we've seen it in the textile industry. As far back as 1980, we had over 175 textile companies. As of now, we only have 25, and these 25 companies are operating far below their optimal capacity. It's just a matter of time before that industry becomes non-existent in Nigeria. So, I mean, the government needs to start looking at how to address the inefficiencies we have across all sectors in the country.
I agree with you. If Tempo permits me for just about one minute very quickly, I know we're short of time, but you see, with the Nigeria story about agriculture, and I love what Luke said much earlier about just funding about 5, 10, 15 big guys, companies or whatever to get us out of this mess. Just spending 2 billion naira, 20 billion naira across 5,000 farmers who will be bringing 10 bags of rice, 15 bags of rice, whatever in. It looks good on the front page of the newspapers by numbers. But in terms of productivity and output and job creation, even in terms of return, tax, whatever to the government, aggregating everything, it doesn't look good for us. So look at how we've been able to ramp up in cement. You can talk about monopoly another day. That you have 3 major cement producers in Nigeria today. And here we are. We have big major brewers in Nigeria today when you talk about brewing industry. Look at what we have, right? So in terms of agriculture as well, we just need to hit the ground running on the big side. Then we can scale down. We're not taking out the small farmers, the small landholder farmers. They can all key into the big boys, as it were. But without us really setting up strategic big names within the agricultural space, we're not going to do anything. I don't care whether oil goes out of fashion or not. I care less about oil. There's something that will always be there: food and food products. Food, food products, food services, everything within the agro-allied industry. And you can never go wrong for last 5,000, 7,000 years of human existence. You can't go wrong with food and agriculture. You can never go wrong. Or everything around horticulture, animal husbandry, fishing, whatever. You can't go wrong along that corridor. So I don't know why it's difficult. So whether oil goes out of extinction or is no longer useful, I care less about that. As world human population begin to increase in millions and billions, you will continue to have food.
I agree totally. I mean, this is a conversation that actually deserves some entire specials on its own, because you have to integrate the aspect of a vibrant commodities exchange when we're talking about agriculture. Key for me is the point that UK, while they were with the EU, have been consistently buying their foods from European countries. And now that Brexit has been actualized, there is that challenge as to how will the UK get food, which is the reason why they are now looking at Africa to see if the Commonwealth countries will be able to supply food to them, regardless of the distance.
The last fight about Brexit was about fishing.
It was about fishing.
Isn't it?
It was about the fishing zone in the water.
Can you imagine the whole political fight for 4 years? Brexit,
fishing rights
down to fish.
Yes.
Look, isn't it very interesting?
It's interesting. Let's get you to speak to the southern markets, and we can now quickly look at the tray of stories that we have there. Investors focus now on SARB, that's the South African Reserve Bank's rate decision, which is going to be holding on January the 21st. And of course, Reuters did a survey 2 days ago and released the results yesterday. Out of some 20 economists that were tracked, it is expected that repo rates will remain at record low of 3.5%. But then again, they do not expect the MPC to change their decision. Luke, I do not know how deep you are in the South African economy, but whatever you want to say regarding how it compares to the Nigerian MPC at this point in time. I know that they too are currently bracing up for their first meeting of the year. What are your expectations, pricing in the effects or impacts of COVID-19 and the release of the vaccines?
So I think for now, for a number of monetary authorities, whether in Africa or not, for now, their stance will still be more for expansionary because of the impact of COVID-19. So we still expect monetary authorities in Africa to continue to keep rates low in order to spur lending across the real sector, so that that can be a quicker recovery from the recession that a number of them are currently facing at the moment. But the case for South Africa really is a bit more structural. So let me put it that way. So it goes beyond COVID-19 itself. I mean, before COVID-19, the economy was already struggling, and one of the things that that's come to fore is the power business over there, the Eskom business. It's been a loss-making entity for some time. The South African government has injected significant amounts of money into that business, and at the end of the day, we are not seeing like improvement in output. I mean, even last year we saw the power outage in South Africa that led to reaction from a number of South Africans. So right now, what the government is trying to do is to split that entity, the power sector, into something similar to what we have here in Nigeria, where we have the power producers, the power transmission company, as well as the power distribution companies. But for now, they are getting negative reaction from civilians because they believe that it can lead to the privatization of the power sector. So that will lead to job losses. So a number of civilians are reacting negatively to that. But I mean, in the long run, it looks more like that's what they are going to adopt. And that would be a good one for them, because over the past 5 to 10 years, we've been hearing cases of corruption within that power entity, that's Eskom. So with privatization, I think they will be able to clean the mess within the company, and that can lead to improvement in output and consequently help to support the South African economy.
If I'm right, I think Eskom is actually currently a listed company, but given the further privatization or restructuring that may happen, there will probably be an unbundling of the entire company if that eventually sets in. As a matter of fact, part of the stories that we have on our radar right now is the fact that they are implementing a stage 2 load shedding till Sunday next week because of a failure of a generating set somewhere. Bosun, anything to say about the SARB MPC meeting coming up next week?
I think there will be a hold of about 3.5%. They will try to see, the administration will try to see if the current lockdown and restrictions, how is it impacting economies and what have you. I think they want to take a hold into the March or April meeting to see how the first quarter actually goes, the full impact of the go back to lockdown 4 and what have you. I think it makes sense for the central bank to hold back in South Africa until the second meeting of the year.
Absolutely. Even though some economists believe that they have a room for rate reduction by some 25 basis points this year. Again, if you consider the deflation that they've been recording in recent time in that country to around between 3.6 and 3.8%. Finally, is North Africa. We may not have enough time to talk on this, but we quickly look at what they have. EFG Hermers, which is a financial services firm for frontier emerging markets, concludes the issuance of 700 million Egyptian pounds for securitized bond on behalf of Amer Group, Porto Group, and Qasatli. I understand that is some kind of debt program for this particular company and for Amer Group and its subsidiaries. The Cairo Investment and Real Estate Development reports some 118 Egyptian pounds profit in November 2020. And Arabia Investment Holding is to boost expansion plan for treasury sales. I think they've already concluded some 65% or 67.5 million units of share sale of that company rather. Bosun, these are some kind of corporate deals. What are your thoughts on these developments in these corporate companies?
I think I'll touch only, because of time, I'll touch only on the EFG Hermers. EFG Hermers is a financial supermarket in Egypt. I think they have a bank, they have financial services, they have insurance. It's a bit like a holding company. And 700 million Egyptian pounds for this Porto and Group, Qasatli, and the rest of them is all within the economic zones, the industrial parks, and all of that in Egypt. It's just helping them to raise some securitized kind of bond, then allow these companies to continue to play within the economic zone. What you've seen consistently with Egypt is that they've consistently moved on core and critical economic infrastructure space. And that is one good news. I just love those guys. They're just quick and fast, hitting the ground running like locusts. They don't waste time. So look at the story today. Rwanda today, Ministry of Trade in Rwanda today is flagging off at 12 o'clock Nigerian time the trading platform for the AFCFTA. We haven't had a word since this whole AFCFTA was launched in January 1st.
Still digesting it.
We haven't heard a word from Nigeria's Ministry of Trade and Industry. Ghana has done its first trade. Rwanda is officially launching today. Yeah. There's no single word as of today from Nigeria's Minister in charge of Industry, Trade and Investment. Not a single word yet. Not a formal statement has been released to the press or to anybody about the AFCFTA, and that really, really sucks. That's my final word.
Right, then. Thank you so much, Bosun Omofaye, Executive Editor for Frontier Africa Market Reports. And of course, Luke Ofojebe, a team lead for equity research at Vetiver Management Capital. Thanks a great deal for your thoughts. Let me release you now to go keep your eyes focused on the numbers that will be trading and crunching today across the market. Oh yeah, inflation. Luke will talk about that. Luke on Monday. Okay, thank you everyone. I think inflation is 11. Oh, so inflation on the radar. Oh, okay, great. I mean, I will be looking forward to what the NBS will be releasing next week, God willing. Thanks a great deal for joining us on the show. I'm Temple Ashaju. I'll see you next time.